Hello, this is Brian Shannon from AlphaTrends.net. It's Wednesday, the 30th of January, 2008. The Amazon earnings have been reported, and the stock's been trading for about a half hour now. We'll take a look at the intraday or after the close action here on this tick chart. You can see that each one of these bars represents 100 ticks. A tick basically being the stock price moved up or down. So it doesn't measure the traditional way that charts do that is time-based, but this is measured on the price movement. So each one of these volume bars will be different based on the number of times it took to trade, and they might represent different periods of time. You can see here that we had our first block of prints basically being 2 minutes long. Now the stock has kind of slowed down a little bit, and the same amount of ticks that we're seeing is taking about 5 minutes to create the same amount of chart data here, just to give you a brief description of how that works. The light blue line is the VWAP. This is the average price, the volume-weighted average price that the stock has traded since the earnings have been released. And you can see that there's that initial knee-jerk sell-off. The stock started to rally, and rallied real strong, actually, all the way up to 79 or so, but found some more selling as people read into the news, I guess, and now we've got the stock solidly below this average price. And not only is it below the average price for the after hours, but it's significantly below today's close. Not significantly, but I mean, you know, a couple dollars at least. The stock closed the regular hours trading session at 74.21. It's trading at 71.65 right now. So it's losing about $2.50. And if we look at the daily time frame here, you can see that the stock is below the declining 10, 20, and 50-day moving averages. It's also below this 200-day moving average, which has acted as a little bit of resistance in here recently. Now, when we back it up to a weekly time frame, these are a couple of the levels that I think are going to be significant for the stock going forward. First of all, this level right here of support that occurred basically in July of 2007. That's one potential area where the stock may continue to fall to and then attempt to stabilize. But right now, the stock is broken, and I think that there's a lot of danger in buying these stocks after they report earnings like this. If the stock fails to hold above this 66 level, then I think that you've got a good chance of the stock completely giving up the gains from last year. Not completely giving up the gains, but giving up the bulk of the gains from last year and perhaps heading down towards this $50 level. Now, it looks unrealistic at this point, but it's a possibility you need to be aware of, that it could happen, because basically when you have such a sharp move so fast like this that occurs you know, in a very short period of time, there's very little support that's going to be found for this stock in that area. You're going to find kind of an air pocket where the stock can just cave in. There's not a lot of people defending the price in that level. So, you know, I'm sure the short sellers are piling into this stock now, even as we speak in the after hours, and you can see it's continuing to maintain its weakness. So I would be very careful with Amazon going forward. It looks like yet another broken tech stock in this bear market.